Welcome to Markets Now. I'm Michelle Rook along with Brad Koima with Koima Varlick. We are seeing mixed trade in the livestock futures, some pressure in the cattle, higher in the hogs, and over in the grains, kind of leaning lower, except for a few of those July contracts in corn and soybeans. And Brad, let's talk about cattle first off. What do you think this week? We kind of held support areas that we needed to last week. We're a little bit lower this morning, but is this still part of this healthy correction that we've talked about in the cattle market?
I would lean toward the latter. Michelle, thanks. Nice to be on again with you. The A couple of questions you asked me there. First, I'll get to the cash question, but so you had a pretty big break, right? Had the reversal up last Thursday, a little bit of follow through on Friday. So today would have been our third up day. I would have loved to have seen that third update, and it's early. This thing can change here yet. That would tell you that maybe that this correction phase is over. Now, seasonally, of course, you got a lot of it's challenges. This is the time of year where you look for box beef to top. This is the time of year you look for weights to bottom. You flip the feature here from middle meats to something other than that, like hamburger hot dogs, as you get to the 4th of July weekend. So yeah, that's going to be the bear story. I guess for somebody that's making that bearish argument, I think you also have to add a paragraph about, oh yeah, by the way, August cattle are at 170 something. They're almost $20 discount to what the cash market is. We've got an awful lot of negativity built in, and I think that is going to continue to incentive us to move cattle on time. And to me, that's the whole key to why this market is as good as it is that we've been current for a long time, Michelle, and I don't. Why wouldn't we stay that way? Old crop corn is still relatively high priced, obviously, even with the last break. But so to me, that's still a big player, part of the big play here.
So what about cash trade? You talk about the discount, obviously, with the futures, but cash, the weighted average 5 area was down almost $4 last week. So will we be back higher because it looks like as far as negotiated totals, the packer maybe didn't have as much inventory around them from last week.
Yeah, I think you've done a nice job of summarizing, and I'm going to swim against the current. I'm going to guess that we're going to be a little bit higher. I think that traditionally everybody expects it'll be lower,
Okay.
or most what the majority does. But I'm going to go with the idea too, like you outlined a little bit, that I think last week the packer used up a lot of that inventory he had bought the week prior to that and the week before that. 634,000 kill, nothing shabby about that for the weekly kill. Yesterday kill 126. By the way, the grade, Texas grades below 70%, another indication of currentness. I just think, I don't know, the Packer wants to kill. I mean, look at that size of the kill. That tells me he's got meat sold and he's still making some money, it looks like. So I think on the kind, I think we got a chance to get back to 190 and maybe even with a little luck, even a tick better than that in the north. But that's, like I said, I'm probably in the minority in that opinion.
Yeah. Box beef, do you think we finally topped there? We're still above 340, but we did have a down day yesterday.
Most likely. I guess I say that tongue in cheek because I just don't think it's really important to the overall market. But I would say yes. To answer your question, it would be very, very seasonally normal to expect something like that. And we're talking about big levels here now. Other than the COVID year, we're at levels that we had that were unprecedented. Okay, so yeah, we'll roll it back some, but you still gotta kind of keep this in context with how great demand is. Last week's comprehensive beef, again, 11% of the beef that we procured that week went for export. 11% is a big deal on beef. Most of us cut our teeth on the arrow when it was 5 or 6%, maybe. So I think that's important. I think it's important too to watch to see what we really do during the summertime in terms of what we do with the traditional retail demand of beef as opposed to the hotel restaurant. That's the one positive thing I think that still is lingering from COVID, is you taught a generation that they can cook their own steak and that tastes pretty good, and you can do it twice a week for what it costs you to go to town.
So hogs have had a nice recovery now off of the contract lows here. We're back up here again today. So do you think this has been pushed by the cash market, or was this just the funds covering that massively short position that they had, or is there something else out there?
Well, if there is, I'm missing it, Michelle. I think the big thing was the funds at such a massive short position. And I know this is a family show, but you and I have said, or at least I've told you, there's an old saying I used to have taped to my telephone here. There's a paddle big enough to fit everyone's behind. And that's finally the case. It looks like on this fund position here in the hogs, where they finally started to liquidate that. Yeah, maybe some Prop 12 stuff, and certainly the cash market has bounced here. To rally in May and June. We used to always do that. So some of this is a little better, but I'm going to throw the caution flag here. We had our third gap up just now on the opening this morning. Sometimes that's the last part of a move. And after as quick as this thing has gone higher, if you know any hog producers, they're hard to come by anymore because it seems like that's all a vertically integrated deal anymore. But if I would be kind of sensitized to maybe paying a close attention here that maybe this is the end of this short covering rally or very close to it anyway. That's my guess.
All right. Well, I was going to ask you if we were getting close to a short-term top, but you already answered that. Let's talk about this corn market. We're seeing just a little weakness, but we got above $6 up to, I believe, $6.09 for a high-end Dees corn. How much of that pullback here is a change in the weather versus just maybe some profit taking or farmer selling when we got above those objectives?
If you look back at a chart there, there's a couple of numbers there above $6, and we tried one again this overnight for size. That's going to provide technical resistance here, and I think provide a reason for some farmer selling. And often farmer selling is prompted by the courage, which is usually created by, well, I caught a rain. Because there are some areas of the Corn Belt that did catch a big rain here over the weekend. I know not everyone, and I feel sorry for you if you didn't. Northwest Iowa happened to catch a giant one, 2 to 3 inches here. And I know it's not that way everywhere. But yeah, so often what will happen is okay, it looks like I'm going to get something, so now I dare to sell something. So I think that was part of it. However, the weather thing, and this is above my pay grade, we'd be better off letting you have the mic here for 5 minutes to talk about weather because you're better at it. But I think the key to the deal is, does that high pressure system move out of the Great Lakes or not? A lot of people have it moving, which with the big high down in Texas, that means everything jet stream slips around, and with weather comes off the Northwest here, we got a chance to catch rain. That would be what the local forecast looks like up in my neck of the woods. But it's more important what happens here in Indiana and Ohio, I guess. And I guess to a degree, Wisconsin, although I don't think Wisconsin is necessarily a critical state for corn production, but unless it's yours, right?
Yeah. But Brad, we've had over $1 rally in December corn off of the lows. We've had over a $2 rally in November beans off the lows. So, some of this is just a little bit of profit taking, isn't it?
I would hope so. And I would hope that as a producer, you'd be sensitized to that. My goodness, a $2 rally in beans.
Yeah.
And I'm a little bit of a farmer. It's hard to lose a bean crop in June 20. The critical weather is yet to come for most of that area of the beans. And I think you got to kind of come to terms a little bit too with that. The rest of the fundamentals, especially the demand fundamentals, are not good.
No.
Demand sucks for corn. And so basis has come apart. So I don't ignore all the signals, and nobody knows it's going to rain or not. The odds actually, though, generally speaking, favor usually it rains. That's why we raise corn here, so I don't know. I'm more of a doubter this year. And I would be more inclined to use rallies like this. And hey, I get it. It's volatile. It's risky. There are things called put options, and some of these short dated ones are not terribly high priced at all. We're encouraging a lot of these guys to, if they're uncomfortable with futures or cash sales, take a look at the options, either side of it. If you're bullish, the calls, or if not, do something to reward the market for the $2 rally, for instance, on the beans.
Yeah, let's hope this was producers rewarding the market and that they took advantage of it. All right, thanks for joining us, Brad Koima with Koima Varlick. That's Markets.